The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, joining us now to discuss the crypto markets is Octavio Marenzi. He's the CEO and founder of management consultancy Opimas. Octavio, thank you for joining us. So it's been a sideways weekend for Bitcoin, and we're awaiting the next inflation report this week. What do you see as the outlook for the crypto markets?
Well, I don't think that on Thursday when we get the CPI print that there is going to be much to be very enthusiastic about. I suspect that inflation will remain quite high. We've got all sorts of factors pushing inflation up. Some of them have been brought under control a bit. Gas prices and stuff like that are looking more encouraging. But there's a whole range of other prices that are looking up, things like rent. And rent weighs very, very heavily into the CPI overall. And that is sort of a lagging indicator. And we've seen many US cities where rents are up 15, 20%, something of that sort. And at the moment, the Fed is really only taking into account a 5 or 6% increase in rental prices. So that will carry on filtering into those prices, keep, I think, inflation numbers high, and that is going to tie the Fed's hands. They're going to have to carry an increasing interest rates, or at least continue to pursue a higher interest rate policy, which is going to weigh down on crypto markets and weigh down on markets in general. So I fear on Thursday we're not going to see much good news, nothing that really is going to buoy crypto markets at this stage.
All right, so we're seeing something interesting with Bitcoin, at least, is that we're seeing a higher correlation with gold during this time. You know, usually it's highly correlated with risk on assets such as the Nasdaq, the S&P 500. But some analysts are saying, well, the past 30-day correlation, you're seeing it actually have a higher correlation with gold. Is it acting more like a safe haven asset? Do you see any weight in that argument?
Oh, I definitely do. I think it's basically, I think both Bitcoin and gold are viewed very much as inflation hedges, or I wouldn't say so much inflation hedges, but hedges against the central bank printing too much money. Certainly Bitcoin, the very underpinnings of it are that, and gold is always considered to be a hedge against the central bank going crazy and just starting to print money willy-nilly in all directions. And so, yes, they're going to be pretty, in this market environment, I think quite tightly correlated overall, because the arguments for buying either one are very, very similar indeed. So I'm not surprised to see that at all. I mean, correlated over the course of the past 30 days, yes, in the sense that they haven't been doing too much and basically going sideways or down slightly. So the correlation there is stronger. But bear in mind, Bitcoin is a very volatile asset, and so those kinds of correlations have a tendency to sort of evaporate quite quickly. So we see things correlated for a few weeks or maybe a month or two, and then the correlation seems to reverse or disappear entirely. So I don't think it's the kind of thing that you can count on entirely, that correlation will stay there permanently.
What kind of strategy are you recommending during this time, during this bear market, in terms of, buying a Bitcoin or other cryptocurrencies?
Well, I think it's pretty much the same as looking at other asset classes right now. I think as long as the Fed continues down this path of increasing interest rates and tightening money supply, is going to be bad for the crypto markets, and it's going to be bad for other risk assets. And by other risk assets, I'm including even bonds and things of that sort, and equities. So all those asset classes, I think, are looking pretty weak at the moment. It seems the best strategy has been to basically put as much in cash as you can stomach and sit on your hands on the sideline and wait for the Fed to turn around. And eventually they will. Now, I don't know when that point will be reached, but we seem to be some way away from that. Eventually they will turn around and say, okay, enough of these high interest rates, we're going to lower interest rates, and that's going to be a big boost then for things like cryptocurrencies, Bitcoin in particular, but other crypto assets as well. But I don't see that happening anytime soon. But I think one has to just carry on watching what the central banks are doing, reading between the lines and reading the tea leaves a bit, and then judging when it makes most sense to get back in, because that point will arrive, but I don't think we're there yet.
Kind of reminds me of what Ray Dalio said last week: cash is no longer trash. We're also anticipating the annual meetings of the IMF and World Bank kicking off in Washington. They're warning of a possible $4 trillion loss in the world's economic output. And I wonder, what you see as the fallout from that.
Well, if we really start to see economies contracting very quickly, then central banks will turn around and say, okay, we've gone far enough in terms of this tightening, we need to loosen again. And we've seen some central banks actually do that already. So the Bank of England has moved in that direction already, but basically saying we may be a bit too far in terms of increasing interest rates. People sitting on government bond portfolios have suffered terribly, so we need to reverse that and start easing again. They've said it's a temporary thing, so they're going to turn around and tighten again at some stage in the future, or at least that's what they're saying and anticipate they will do. But really, the IMF and World Bank, these are forecasts about what they expect to see happen in the future. Some of the economists at those institutions have been very critical of central banks increasing interest rates so much and said that's bound to bring a recession with it, and likely it will. But I think the Fed in particular has taken that into account and said we're willing to accept that kind of pain in return for getting inflation under control. So I don't think, unless things look really bad and really these very dire forecasts come into effect that they're forecasting, that the Fed is going to change direction. We're just going to carry on going the same way we have been over the course of the past 6 months.